What's going on, everybody? Welcome back to another video from Both of the Wall Trading. I hope you guys are having a nice start to your week. I hope you guys aren't too tired from daylight savings times. I know I am. My whole day's out of whack. But here I am making another video for you guys. If you haven't done so already, please like and subscribe to this channel. This is a channel I created to encourage people to learn how to trade. So if you're interested in learning how to trade, check out my channel, check out a few of my videos, and hopefully you enjoy what I put out there. I have a website I would really like for you to check out. It's bowlsofthewalltrading.com. I have an investing course on there, and I also have a free newsletter for you to sign up. All I need is your email address. And I also have a free chat room, and I'll leave the link in the description of this video. I'm not a financial advisor or financial investor. Wait, no, I'm not a financial advisor or financial planner. So anything that I discuss here is just my personal opinion. I always stress the fact that you guys need to practice before putting real money up. So that's my hope, that I can break down that barrier or stereotype that investing is difficult, and hopefully you learn some things. I like to make my videos, I like to divide them. I like to talk about day trading first, and then I go into swing trading. So yeah, I give you guys my website and all that good stuff. So now let's get to this watch list. So so for swing trading, I usually do. For day trading, I usually, I always do a intraday chart where I have a 1 day and 5 minute chart. So I'll change that right now. Okay, so we are currently looking at a 1 day chart of Snapchat, but that's not one of my, actually this could be a potential day trade, but it's not the one of the ones that I had written down. The first one that I had is our RIG. Get rid of this. Oh, what happened? Hold on. Oh, what did I do? What did I just do? Hold on. Okay, I think I'm back. I don't know what I just did. So for day trading, what I like to do is I like to have my chart like this, 1 day, 5 minute candlesticks. And what I usually like to do is look for momentum plays. Basically what this means is I'm just looking for stocks that had a nice run up to the upside on the intraday chart, and I'm just looking for the high of the day. And what we're basically doing is we're looking for the stock to break that high of day the next day, and that could basically mean that it could have a nice little pop to the upside, and you can make some quick money that way. So if we're looking at RIG, we identify the high of day right here at $8.73. And if we zoom in, this happened right here. That's after the market closed. So this light gray area is after the market closed. So it's making new highs, or it made a new high after the market closed, which is a very positive sign. So that's one of the reasons why I like this stock. I put my resistance line right there, which is, again, it's where the high of the day is. And all we're looking for tomorrow is for the price to break above this line that we have drawn right here. We definitely want to have good volume. That's the fuel that makes us go. And once it does that, we could say that we're going to buy a couple shares, or however many shares you want to buy, because it's in theory, it's making a new high. And it's in theory continuing the momentum that it had today. So that's the theory behind momentum trading. Does that mean that if it breaks $8.73 with good volume that it's going to take off? Absolutely not. It could very well go up a couple cents and then come right back down. That's why I always stress the fact that you need a stop loss, that you need to have an exit strategy, and you need to really know everything that can happen before you invest real money, because nothing is guaranteed when you're investing, and you need to be ready for everything. There's been many situations where I've had a stock like this and it does exactly what I want it to do, but it just goes up maybe 3 cents and comes right back down. So if you're not ready for those types of situations, you could lose a lot of money. So again, just be ready for that. Also, I wanted to say that this is just one way of day trading. It does not mean that this is the only way of day trading. There's many ways of day trading. So my advice to you is just finding a way that works for you and a way that makes sense. And hopefully that's the way that I do it. The next one is VIPS. And if we zoom out, so again, this is a type of stock that I like, a stock that wasn't really doing much, and then it had a nice run up to the upside, and it made a new high. Where's the high? Right there at $7.88. So that is where I draw my line, which it's really called a resistance line. And we are just looking for the same pattern tomorrow. We want the price action to break above $7.88. Why $7.88? Because that was the high of the day. So if it breaks above that with good volume, the theory is that it's going to continue this momentum that it had today. So that's the theory. Again, volume is very important. But again, at the same time, just because it breaks above $7.88, it does not guarantee you that it's going to go up for 20 cents, 30 cents a share. It could very well go up maybe 5 cents a share and then come right back down. So again, you have to be ready for that and you have to prepare for that. The next one, GLBS. And this is one that I really, really like. And this is an old line, so I'm going to get rid of this. So if I'm looking at this stock made a high today in the pre-market at $10.60. So that's where I'm drawing my line right there. And the reason I like this is because it made a high in the pre-market, then it sold off. And then after the market closed, it's trying to come back up to that $10.60 line. So that looks pretty, this looks like a pretty good chart to me because it went down, as you could tell right here, but it slowly started to recover. Well, when the market closed, it just kind of recovered really quickly. So there's eyes watching the stock. And the reason I know that is because it's still being traded after the market closed, which is this light gray area. So I like this one to continue to go up. And if it goes above $10.60, again, with good volume, it could create a nice opportunity. This is a really, really good chart setup right here. This would be considered a double top if it were to break above. So this is one that I really, really like. So that's it as far as day trades or day trading. I'm going to switch it over to swing trading. And for that, I change my chart to a 1 year, 1 day graph. And I have these old lines here that I got to get rid of. So I'll get rid of that. And all right, I'll keep that one there. So, so for day trading, I use a 1 day, 5 minute candlestick chart. And for swing trading, I use a 1 year, 1 day chart, which basically means we're looking at a year and each of these candlesticks is 1 day. All right, so the first one that I have is CHK, and this is the one that I had last week, I believe, because it's going in this pattern and that I have drawn right here with these blue lines. And if you could see right here, it's basically following this trend line. Let me get rid of this blue line right here. Wrong one. Remove. And I got one more. Remove. So if you look at this blue line right here, this is a trend line that I have drawn. And it's basically following this trend line. So if you look here, it doesn't go below this blue line that I have drawn. It doesn't go below there. It doesn't go below here, here, or even here. So it's just like mirroring this line. So what we could say is that at some point it's going to start to rebound back up, just like it did here, just like it did here, here. And in theory, we could say, well, it did it before. It's bouncing off of this trend line, so it's going to bounce again. So that would be the theory. So this is one to watch for the next couple of days just to see if it does start to rebound back up. SIRI is the next one. And this is another pattern. It was a sideways triangle. It's still kind of trading in that range. It still hasn't really decided what it's going to do. Oops. Whether it's going to break to the upside or break to the downside. So this is another one that I have because at some point it's going to have to decide if it's going to break that trend line to the upside and make all the longs money, or if it's going to break to the downside and make all the shorts money. So probably tomorrow or the day after, we'll know what it's going to do. So that's another one to keep on watch. And the last one is SWN. And this is more of my traditional pattern that I'm really, really comfortable with. It's the just using a double bottom basically, or just a flat level of support. And the theory behind that is you just look for a level of support, which is this blue line right here. And what does that mean? It just means that the stock comes and it falls on that line and it comes back up. Basically, it doesn't go below that. So if I'm looking at a stock action today or the last couple of days, it's been going down. So I want this stock to continue to go down, touch this level of support, and hopefully start to bounce back up. And if it gives me the correct signal, then I would invest, because in theory, we can say, well, in the past, it uses this line as a resistance. I'm sorry, as a support, which means it comes down, touches that support level, and it goes back up. So if it comes right back down over here to that support level, we can say in the past it's done it before, and I'm betting on the fact that it'll do it again. And that's the theory behind that double bottom play. So that is all that I have for you tonight. Thank you so much for watching. Again, if you haven't done so, please like and subscribe. Make sure to check out the website, BoostOfTheWallTrading.com. I have some really cool content on there. Follow me on social media. I have all that information on the website as well. I'll leave it there. And thank you so much for watching, everybody. Have a good night.